Hey guys, welcome to another live trading room session. Hope you guys can hear me. Please let me know in the chat box that you are with me and can see the screen, and we will start our day. So today is midterm election in the US. So we should expect nice volatility. It will be interesting looking at the stats coming from the news. Hey, Enrique. Okay, wonderful. So just a quick introduction in case it's your first time here with me. My name is Michael. I've been mostly trading stocks and futures, indices, and we will talk about that today. Obviously, if you have questions regarding Forex, pairs, whatever you want to trade, feel free to drop it in the chat. Everything or 95% of what I'm going to talk about today will fit your trading as well. So it doesn't really matter which market are you trading or what type of asset. You can take the stuff that we will talk about today and apply them to your trading. And again, if you have any questions, so feel free to ask them along the way. Okay, let's dive in. So basically, the first thing that I usually do, and I always tell you that, guys, for the last few sessions that we had here, that even if you're not trading stocks or even if you're not trading indices, you want to watch at least the US market, because that's the leader of all. So maybe you won't see a perfect correlation between the NASDAQ or the S&P 500 to one of the pairs you want to trade, but generally speaking, you want to understand that the US market is going up or down or consolidating or at a major support level or major resistance level, etc. So even if you're not going to trade the indices or the stocks market, you want to understand at least what is the sentiment, where are we heading basically. So what I usually do is just go and start with the NASDAQ. The NASDAQ is the 100 the largest technological companies in the US, and by far it was the best index to watch for the last at least 3-4 years. Is the leader of all. If in the past the S&P 500 was the leader, today definitely the NASDAQ, the technological industry, dominate the market by far. So what I'm doing is going to the NQ. NQ is the future for the NASDAQ, the contract. So basically what I want to see, what I usually use is a 4H chart, because usually my trading involved, in case of futures, with holding for a few minutes, not few minutes, but few hours, maybe a day or two. So a 4H chart will definitely do the work. In stocks, I usually day trade, so I'm zooming in all the way to 1 minute candles. So on a 4H chart, I can get a full picture, understand where we heading, where we at the moment. And if I'm looking again at the NASDAQ on a 4H, obviously we're still in a downtrend for the last 11 months, just from the beginning of 2022. And as we talked about the last few sessions, we reached that major support level, bounced from it perfectly, took another dip right the last few days, the last week basically, after the Fed announcement increasing the interest rate, and now we are bouncing off of that level as well. So in this case, let's zoom in and talk about this area right here. Remember that when we're looking at the chart right now, you always want to go back to understand the history of the chart, and only then try to basically analyze and understand if or predict if the market should continue higher from here or drop down. So when we're looking at the chart, let's say 2 weeks, a month ago, you can see that we're basically sidewalking, right? We're consolidating, we're just doing a nice move to the down, to the right side. You don't see any trend here, not a positive trend, not a negative trend, just moving sideways. So when you're doing that, you can play, first of all, you can play the top and the bottom. So the resistance area right here that we talked about in the previous lessons, you can easily short that. We'll talk about in a second a trade that I made here, shorted all the way down here. So when you're looking at a range, you can easily trade that from the top and from the bottom. So this area was a great place to go long as well. We will zoom in a second and talk about the small nuances that you could have taken in order to trade it. And again, even if you're not trading industries, you can take the same technique and apply it to your Forex trading or whatever you want to trade. It doesn't matter which market as well. So the market, the Nasdaq moved nicely in a small uptrend channel, then reached the resistance level, tested again, broke down, a perfectly break of strong momentum move, breaking the channel, reaching another support level, and from that point bouncing up. So if I'm zooming in and going to the 1H, I'm on a 1H chart, you can see the break that occurred here. And let's talk about, just before the break, let's talk about the channel that we traded in. Let me clear that line. Okay, so we had a nice move to the upside, reaching a point, dropping down, reaching the same point, dropping down, another one. Every time we're reaching that resistance level, the price is moving lower and reaching the support area right here at the channel, at the bottom of the channel. The reason I took my short here at the break was simply that. Let me zoom in. This is a 1H, right? So when we reached that support area of that channel, again, I looked at it, and what I wanted to see in order to not to go short, basically, what I wanted to see is that the price is bouncing strongly up, the same as it did here, right? Every time it touches the line, it bounced up from it. The same, it did it when we first started, obviously, and then the second time here, broke it and bounced right away in the same candle, the same hour. Then again, touched it again, bouncing pretty strong from it. And here in this case, we didn't see any bounce up. So we did touch it, sat on it for a second, but nothing more than that. So that was one of the things that got me believe or thinking that the buyers here are getting weaker. Another parameter that you can take to your advantage is if you're looking at the 420 EMA. Okay, can't see the chart, sorry. Okay, yeah, gotcha. My bad. Okay. Great, thanks. Okay, so yeah, it's coming. The chart is coming. Yeah. Okay, so let me get back just a tiny bit, and we'll talk about it again now with a chart. So the price moving sideways for the last month or so, then moving a little bit higher, like creating some of a trend, but trading in a nice channel, and then breaking that channel and dropping down majorly. Now, what I looked for are basically some parameters or hints, right, that will tell me that the price should break that channel and won't hold that support level. So some of those, if I'm zooming in on a 1H, some of those were this. First, we didn't bounce from it as much as we did here. The second we touched that line in the previous supports, the second we touched it, we bounced from it and saw a nice momentum move to the upside. In this case, it didn't occur here. Another thing that you would have noticed is if you're using either 200 EMA, let me write it down for you in the chat, 200 EMA or 420 EMA. Those are my favorite EMAs. EMA is exponential moving average. And basically, if you use those two, you can sometimes see resistance and support, right? As you can see on the chart right now, the green one, support, resistance, support, playing with it, and then another resistance area right here. So you can see that the prices sometimes, not all the time, but sometimes create a resistance and support level. The EMAs create a resistance and support levels. So when you understand that the price can't break through, so this is the process basically. So the price can't break through this resistance level right here. Let me mark it. Price can't break through this resistance level, dropping down below the EMAs, reaching the support level, and instead of bouncing up from it, you see that it's struggling to do that. So you understand that the buyers are kind of weaker, right? Because if the buyers were strong enough, they would have break through that level here. And if they were strong enough, they would have held this EMAs as support and bounced from it. And if they were strong enough, they would have held this support level and bounced up as well from it. So you got like three indicators, three parameters that every time the buyers should have showed their strength, they were actually not there to take it. Not in the resistance level, not as support, and not in another support of the channel. Not from the EMAs and not from the channel. So in this case, in my mind, I understand that those elements supposed to drop the price, or basically bring the sellers, and the sellers will be a little bit more aggressive. Then I took my short just a little bit before the break of the channel, because I understood those two parameters, and I took some chunk in just to get into that trade. And as soon as I saw that the Fed released their announcement and the price started to decline below again the EMAs, I added another and took that nice momentum move to the downside. Now that was a drop that, again, it doesn't have to be the Nasdaq, right? It could be pound or the euro or whatever you trade in, the yen. As soon as you understand the price action and the way that the buyers are getting weaker, you can understand that the sellers should increase their position and their momentum. You can also, we talked about it also in the previous lesson, you can also look at the trend, the angle of the rally. For example, look how strong it was right here. The movement to the upside was very strong, very sharp, perfect rally. Then the second push to the upside was much lower than that, right? A lot of red candles inside. The angle of the rally is the trend much decreasing, and you can see that it takes it much more time to reach the same top. And then that was supposed to be, again, another push to the upside around the support level, but no buyers came in. So you can see that the angle is dropping down, and you understand that the buyers are not in the game anymore. And now they are reaching this support level, and instead of holding it and pushing higher, they can't do anything, and the price is dropping down. So those kind of elements or nuances that you can take to your trading, and it doesn't matter if you trade in Forex, futures, stocks, Asian market, or whatever. Now, when we reach that area of support right here, this is more of to put it in more exact matter, it should be something like that, right? Taking a little bit more of the price from here as well. And when we reach that, we talked about it as well in the previous lessons. Look at the MACD, the MACD, that is switching sides from sellers momentum to buyers momentum, and you can test that by looking at the lows of the price comparing to the lows in the MACD. So these are basically look at the lows here on the MACD. The next lows were higher than the previous one, comparing to the price that the lows were lower from the previous one. So basically you can see a diversion between the MACD that's showing us that the lows are getting higher instead of the price that the lows are getting lower. So this is basically a shift of the momentum between the sellers that dropped the price and now can't really put the price lower than that, and while the buyers taking control and basically reversing the trend. So that was also a great place to look for the upside. I didn't trade this one, I didn't take that long, but basically same principles would have applied here. We in a major support level after a nice momentum drop to the downside, reaching again, we are basically trending as we saw in the previous on the 4H. We're basically ranging sideways. We reached that point where we're getting closer to a support level. MACD with a divergence, nice volume coming in at the bottom. That could have been a great trade to take. We talked about it, by the way, in our Discord. As some of you may know, basically I'm the CEO of Trade a Pool, and Trade a Pool is a funding powered by the 5ers for stock traders. So in case you want to trade stocks, you can definitely check us out. We have a 14 days free trial. I'll put in the link in a second. And we talked about it through our Discord and through some other channels as well. Sometimes just in the office with the other traders. So now we're basically reaching the 200 EMA. As you can see, the green candle right here, the green EMA. After a nice move to the upside. Again, not a major move as you can see, because every bounce up, every move to the upside is automatically retracing back or pulling back every time it doing that. So there is a move to the upside, but very tiny moves to the upside. So I'm not banking on continuing furthermore. You can obviously mark the levels right here and basically draw a channel. Should be something like this. So this is the channel. So one of the scenarios we can create, sorry, is pushing higher to the 420 EMA plus the resistance of the channel, and from that point dropping down. Could be. What I would have expected to see or want to see is actually a drop down, breaking that support level, retesting it, and from there dropping down again. That would be a more favorite, at least, scenario that I would have expect. So basically dropping down, retesting it, and continue to the downside, or the same thing, pushing up to a resistance level and then dropping down. So either way, even if we'll see a bounce up first, I'm more of a bias on the short side. And again, I'm talking about the 1H. So it could be same day or 2 days. I'm not talking about 6 months from now. Yeah, we're talking about short-term trading. So in this case, I'm more of a short side biased at the moment. Even if we will see a bounce up, I would actually look to sell it and not join the uptrend. You can also see that we might, this is a bit early, but we might see negative deviation, diversion in the MACD. Those highs are getting lower, while those highs in the price got higher. Like the last high was higher than the previous one, comparing to the opposite in the MACD. So it does showing us some decrease in the buyer side, but this is just a tiny diversion, and it's also a bit early to say. So again, what I would look for is shorting the Nasdaq, either after a nice pop-up or after a break of the channel, retesting it, and then from that point looking for a short position, and we'll see where it will go from there. The same if we're looking at the S&P 500. They are usually go together. We're trending in a channel, nice channel to the downside. We had a nice here deviation, divergence from the prices, higher highs, while the price of the MACD is showing lower highs. Then we had the drop coming from the Fed, a bounce up. We did break through the 200 EMA here, as you can see. So in order to go down again, we will have to see a break, another break of that EMA. What I would have expect here is going up to the 420. This is a nice resistance level right here, reaching that level and looking to short that area. You can mark this trend line or maybe even a channel. It should be somewhere along. This is the channel. So it would be perfect if we will, this is the scenario again, I don't know if it will occur or not. I can only draw my lines, and when I see one of them reacting, I can go in. So let's say the price will go higher, we'll short it right here. If the price will break that level and retest it, then another short position could be here, and from that point it should continue much further more to the downside. But again, this is just a 4H, so we're not talking about weeks. Speaking of another instrument that we can check, and again we covered that as well in the previous lesson, always comparing the S&P and the Nasdaq to the VIX, the VX. The VIX is the volatility index of the Chicago basically options. So what we want to see is the opposite direction between the VIX and the S&P and the Nasdaq. So when the S&P is going up, the VIX will drop down, and the opposite. So in this case, I also want to see some levels on the VIX, and you will see as soon as you start working with that, you will see how beautifully it reacts every time that the price is reaching a major support or resistance level. So in this case, for example, we can mark the 24 point in the VIX. So if the price will drop right here, then we should expect a support level from the VIX. That means that the price will go higher and the price of the S&P will drop down. So it does make sense what we just talked about in the S&P and the Nasdaq. Now that you can see that it's correlating properly with the VIX as well. So the VIX will drop down, will reach a major support level. If the VIX is going up from that support level, that means that the S&P and the Nasdaq should continue to the downside. So remember that as well. To me, it makes sense that this is what we will see. But again, it's not about really, when you're trading, it's not about predicting really. It's just about executing the plan. So if you have a plan, for example, as we talked about right now, the S&P and the Nasdaq, when the VIX will reach that, if obviously the VIX will reach that 24 and will hold that, and the S&P and the Nasdaq will reach that resistance levels as mentioned, then it will be the right call to take the trade. If it won't happen as we planned, then nothing is really relevant, because what we want to trade is actually things that we created before, the plan that we created before or built before, and only then execute it, and not just randomly go into trades, etc. So this is what I see at the moment on the Nasdaq, the S&P. If you have any charts that you want to check out, feel free to drop them here. I'll take a moment to let you know, I don't know if some of you heard about it, but we are hosting a live event. We're hosting a live event in London next year, in the summer of 2023. The tickets, the early birds price tickets are now available, and we got 52 days until the end of that early bird price. So feel free to go to Traders Day Live. This is gonna be a huge event. We have lots of speakers, a lot of content for you, covering basically every aspect of trading. So you can just go ahead and do that. And we also hosting a tournament in that event with lots of prizes and good vibe of traders. 100% trading, no BS, no sales, nothing like that. So you can go and check it out as well. That's Traders Day Live. And for those of you guys who wanna join us at the Trade a Pool, trading stocks, you can check that out as well. Trade a Pool is basically a funding stock company. We are a new brand powered by the 5ers, so we are legit and good. And you can basically day trade stocks and ETFs. And the market is beautifully to trade right now. The momentum is, and the volatility is there, and you can actually just trade even the QQQ, the ETF for the Nasdaq, or the Tesla, the big names, Baba, Apple. You can trade them all. We got more than 3,000 symbols there. Crazy buying power comparing to what you get in with a broker. And obviously you trade in our funds. As soon as you pass the evaluation, you get funded by us and start splitting the profit. So guys, I wish you all the best and success. Obviously I'll see you next time. And if you have any questions, you know where to find us. Take care for now. Bye.